Scene script. Have you ever asked yourself where you stand financially? It's a question we often avoid, yet understanding our current financial situation is crucial. It's like the foundation of a house. If it's not solid, the rest of the structure may be unstable. So where do we start? We begin by analyzing our income. How much are we earning and where is it coming from? Next, we examine our expenses. What are our necessary outgoings and where might we be spending too frivolously? It's essential to keep track of these to avoid getting caught in a cycle of overspending. Then we delve into our debts. How much do we owe and what are the interest rates? It's important to have a clear picture of our liabilities to manage them effectively. Lastly, we consider our assets. What do we own that has value? This could be anything from property to investments. This assessment is your starting point and will guide your future financial decisions. What are your financial goals? That's the question that brings us to the second step of creating your financial roadmap. Setting clear, achievable financial goals is crucial to your financial success. These goals can range from saving for a new home or your child's education to planning for retirement or paying off debt. Just having goals isn't enough, they need to be SMART. This acronym stands for specific, measurable, achievable, relevant, and time-bound. Specific means your goal should be well-defined. Instead of saying, I want to save money, say, I want to save for a down payment on a house. Measurable means you should be able to track your progress. If your goal is to save $20,000, you can measure your progress as you save. Achievable means your goal should be realistic, based on your income and expenses. Relevant means your goal should align with your long-term financial objectives. And finally, time-bound means your goal should have a deadline. This creates a sense of urgency and helps you stay focused. Remember, your goals should be specific, measurable, achievable, relevant, and time-bound. Scene script. Are you keeping track of your spending? It's time to create a budget and expense plan. This is a key step in our financial roadmap, as it lays the groundwork for all your financial decisions. A detailed budget is not just about controlling your spending, it's about aligning your expenses to your financial goals. Imagine your income as a pie. Each slice represents a category of your spending: housing, groceries, entertainment, savings, and so on. By tracking your expenses, you can see exactly where your money is going and identify areas where you could potentially save. Remember, it's not about depriving yourself of the things you enjoy, but about making mindful decisions that bring you closer to achieving your financial goals. And yes, it might require some discipline and a bit of adjustment. But the more you stick to it, the easier it becomes. Your budget is your financial compass, guiding you towards your goals. Are you prepared for a financial emergency? Life is unpredictable and financial emergencies can strike without warning. This is where an emergency fund enters the picture. It's a stash of money set aside to cover the financial surprises life throws your way. So, how much should you aim to save in your emergency fund? A good rule of thumb is to squirrel away enough to cover 3 to 6 months' worth of living expenses. This provides a buffer during unexpected life events such as a job loss, medical emergency, or major home repairs. But remember, this fund is not for vacations, big-ticket purchases, or investment opportunities. It's a safety net designed to keep you afloat during times of financial instability. Building an emergency fund might seem daunting, but start small and gradually increase your savings over time. Every little bit counts. An emergency fund is your safety net during unforeseen financial storms. Are you struggling with high-interest debt? It's a common financial hurdle, but one that can be overcome with a strategic approach. First off, it's crucial to understand the types of debt you have. Are they credit cards, student loans, or perhaps a mortgage? Each type of debt comes with its own interest rate and repayment terms. The key to managing debt wisely is prioritizing. Aim to pay off high-interest debts first. These are usually the ones that cost you the most over time. However, it's essential not to neglect your savings and investments while doing so. Remember, your financial growth is a balancing act. On one hand, you're reducing debt, and on the other, you're building your wealth. It might seem like a tricky tightrope walk, but with careful planning, you can maintain a healthy balance. Managing your debts wisely is a critical step towards financial growth. So, take charge, make a plan, and watch your financial stress start to melt away. Are you investing for your future? If not, now's the time to start. Investing isn't just about becoming a millionaire overnight. It's about securing your financial future and creating wealth over time. It's about making your money work for you, even while you sleep. The magic of investing lies in the concept of compound growth. It's the snowball effect where your wealth could potentially grow faster and bigger over time as your earnings generate even more earnings. Now, there's no one-size-fits-all approach to investing. It's a personal journey that depends on your financial goals and risk tolerance. You might choose to invest in stocks for higher returns or perhaps mutual funds for diversification. Retirement accounts like a 401k or an IRA are also excellent long-term investment options. Remember, the earlier you start investing, the more time your money has to grow. Investing is a key component of your financial roadmap. So let's get started on this journey to financial freedom. When was the last time you reviewed your financial plan? Just like a vehicle needs regular tune-ups to run smoothly, your financial roadmap requires consistent reviews and adjustments to stay on track. This is a crucial part of your financial journey, and it's not a one-and-done deal. Our lives are dynamic, filled with changes. Maybe you got a new job, moved to a different city, or started a family. All these life events can significantly impact your financial situation and goals. Therefore, it's essential to keep your financial roadmap flexible and adaptable. Regularly review your income, expenses, savings, investments, and debt. Make necessary adjustments to reflect any changes in your financial circumstances or goals. This might mean reallocating your budget, adjusting your savings rate, or revising your investment strategies. Remember, your financial roadmap should evolve as your life changes. It's not about perfection, but progress and adaptability. Stay on top of your finances and keep moving towards your goals.